Welcome back to the podcast, everyone. Today, we are diving into the results of a giant in the IT services world, Tata Consultancy Services, or TCS. They're a major player globally, part of the Tata Group, and definitely one to watch.
Absolutely. TCS is a behemoth, providing IT services, consulting, and business solutions worldwide. With a massive workforce and a global footprint, their results always give us a sense of the broader tech trends.
So, they've released their audited financial results for the financial year ending March 31st, 2025. The board of directors approved these results in their meeting on April 10th, 2025. We've got both the standalone and the consolidated figures here, so we can get a comprehensive picture.
Right. It's always good to look at both. Consolidated gives you the view of the entire group, including subsidiaries, while standalone focuses on the main Indian company's performance.
Let's jump into the key numbers then. How did TCS perform in the last financial year, say looking at the consolidated results first?
Okay, starting with the consolidated picture for the full financial year 25, revenue from operations came in strong at 255,324 crore rupees. That's up about 6.0% compared to the 240,893 crore rupees they reported in financial year 24.
A 6% growth in this environment seems pretty decent for a company of their size. What about profitability for the full year?
Profit before tax, or PBT, for financial year 25 was 65,331 crore rupees, which is a nice increase of about 5.4% from 61,997 crore rupees in the previous year. And the profit after tax, or PAT, attributable to shareholders, landed at 48,553 crore rupees, up 5.9% year-over-year from 45,908 crore rupees.
So both revenue and profit showing steady growth for the full year on a consolidated basis. How did the last quarter, Q4 of financial year 25 look specifically? Sometimes the last quarter gives a hint about the near-term momentum.
Good point. For Q4 financial year 25, consolidated revenue was 64,479 crore rupees. That's a growth of 5.3% compared to 61,237 crore rupees in Q4 of financial year 24. However, profitability in Q4 showed a slight dip compared to the previous year's quarter. PBT was 16,402 crore rupees, down 2.7% year-over-year. Similarly, PAT attributable to shareholders was 12,224 crore rupees, down about 1.7% from Q4 of financial year 24.
So the full year looks solid, but Q4 saw a slight pressure on profits compared to last year's Q4, even though revenue grew. What about the earnings per share, the EPS, on a consolidated basis?
For the full financial year 25, the basic EPS stood at 124.19 rupees, up from 125.88 rupees last year. But consistent with the quarterly profit trend, the Q4 EPS was 33.79 rupees, slightly down from 34.37 rupees in Q4 in financial year 24.
Interesting. Now, let's switch to the standalone results. Just the main TCS entity, how did that perform? Sometimes the core company's performance differs significantly.
Looking at the standalone figures for the full financial year 25, revenue was 214,853 crore rupees, showing a solid growth of 6.2%. Year-over-year, standalone PBT was 62,648 crore rupees, up a healthy 8.8%, and the standalone PAT was even stronger, coming in at 48,057 crore rupees. That's a significant 10.3% jump year-over-year.
Wow, so standalone profit growth actually outpaced the consolidated profit growth for the full year. How did the standalone Q4 look? Did it mirror the consolidated trend?
Yes, it did show a similar trend in Q4. Standalone revenue for Q4 was 54,136 crore rupees, up 5.1% year-over-year. But again, PBT dipped by 3.3% to 14,672 crore rupees, and PAT was down 2.4% year-over-year to 11,116 crore rupees. So the standalone EPS for Q4 was 30.72 rupees compared to 31.48 rupees in Q4 last year, while the full year standalone EPS was 132.83 rupees, up nicely from 119.44 rupees.
Okay, so the theme seems to be solid full year growth, especially on the standalone side, but some margin pressure or slower profit growth in Q4 compared to the previous year's Q4, both for standalone and consolidated. What does this tell us about profitability margins?
Let's look at the net profit margins. For the full year, the consolidated net margin was around 19.1%, which is pretty stable. The standalone net margin for the full year was higher, around 22.4%. This indicates the core Indian operations are more profitable than the consolidated group average, which isn't unusual given how global subsidiaries operate. For Q4, the consolidated margin was also about 19.1%, while the standalone margin was about 25%. So standalone consistently shows higher margins. The slight dip in Q4 profit growth despite revenue growth suggests maybe some cost pressures or changes in the business mix during that specific quarter. We should also note the press release mentioned other income wasn't particularly large, suggesting core operations are the main driver.
Any major one-off costs or gains, exceptional items impacting these results?
For financial year 25, the results look clean in terms of exceptional items listed on the main statement. However, it's worth remembering that financial year 24 had an exceptional item, a settlement of a legal claim amounting to 958 crore rupees, which impacted both consolidated and standalone PBT that year. So the year-over-year comparison for PBT, especially on the standalone side, looks even better for financial year 25 because financial year 24 had that hit.
That's a good context point. What about the balance sheet? Any quick highlights from the consolidated or standalone figures?
Looking at the consolidated balance sheet as of March 31st, 2025, total assets stand at 159,629 crore rupees, up from 146,449 crore rupees last year. Total equity attributable to shareholders has increased to 94,756 crore rupees, from 90,489 crore rupees. On the standalone side, total assets reached 132,788 crore rupees and total equity is 75,617 crore rupees. Both balance sheets look healthy and growing.
And cash flows? How is TCS doing in terms of generating and utilizing cash? Any big moves there?
Cash flow looks robust. On a consolidated basis for financial year 25, net cash generated from operating activities was strong at 48,908 crore rupees, slightly up from 44,338 crore rupees in the previous year. A big outflow was, of course, dividends paid, a massive 44,864 crore rupees on the consolidated side. Investing activities saw a net outflow, including payments for property, plant, and equipment, and notably an outflow of 1,063 crore rupees for the acquisition of assets, which likely relates to the TRIL Bengaluru real estate entities they acquired in January 2025 for about 1,593 crore rupees in total consideration.
That TRIL acquisition is interesting. And the standalone cash flow?
Standalone cash flow from operations was also healthy at 40,816 crore rupees for financial year 25. Dividend payments were the major financing outflow here too. The TRIL acquisition impact is also visible in the standalone investing activities, showing an outflow for core acquisition of subsidiaries of 1,036 crore rupees.
Okay, let's shift gears to the business segments. The press release usually gives a good breakdown. How did different parts of TCS's business perform on a consolidated basis?
Right. The press release breaks it down by industry verticals and markets. For the full year, growth was led by regional markets, which grew a staggering 37.2%. Energy, resources, and utilities also did well, growing 5.1%. Manufacturing grew 2.9%. However, some key segments saw slower growth or contraction. BFSI, their largest vertical, grew only 0.7% year over year. Communication and media was down 9.5%, and life sciences and healthcare contracted by 1.6%. Technology and services saw a small contraction of 1.3%.
So, a mixed bag across verticals. BFSI being slow is a bit concerning given its size, but strong growth in regional markets helped compensate. How did the Q4 segment performance look?
In Q4, Regional markets again led the charge with 22.5% growth year over year. Energy, resources, and utilities grew 4.6%. BFSI showed some positive movement with 2.5% growth, but again, communication and media was down 9.8%, life sciences and healthcare down 5.6%, and manufacturing down 2.9% for the quarter, year over year. Geographically, for Q4, India was a star performer with 33.0% growth, MEA grew 13.2%, and Asia Pacific grew 6.4%. North America, their biggest market, contracted by 1.9%, while the UK and continental Europe saw modest growth of 1.2% and 1.4% respectively in constant currency terms.
That geographical split is insightful. Strong domestic performance, but some headwinds in North America. So, summarizing the overall performance, what's the story?
The story for financial year 25 is one of resilience and steady growth, crossing the significant $30 billion milestone. They achieved this despite macroeconomic uncertainty and some softness in major markets like North America and key verticals like BFSI. Profitability remained healthy, especially on the standalone front. Q4 showed continued revenue growth, but faced some profit pressure compared to the previous year's quarter. The strong order book is a major positive. TCV, or total contract value, was a record $39.4 billion for the full year and $12.2 billion in Q4 alone.
That strong order book definitely provides visibility. Were there any other significant notes or events mentioned in the reports we should touch upon?
The proposed final dividend of 30 rupees per share is significant, bringing the total dividend for financial year 25 to 126 rupees per share, including the interim dividends already paid. That's a substantial payout to shareholders. The acquisition of the TRIL entities also shows their focus on potentially expanding infrastructure or real estate capabilities, likely for their own use or future development. The management commentary in the press release heavily emphasizes their focus on AI and Gen AI, positioning it as a key growth driver moving forward.
Now, a crucial part, the auditor's report. We saw in the BF Utilities example how critical this can be. What did the auditors, BSR and Co LLP, say about TCS's financials?
This is a major positive for TCS. Both the standalone and the consolidated financial results received an unmodified opinion from the auditors, BSR and Co LP. This means the auditors found that the financial statements give a true and fair view and are free from material misstatement, complying with the accounting standards. There were no qualifications, no adverse opinions, and no emphasis of matter paragraphs mentioned.
That's excellent news. An unmodified, clean audit report from a reputable firm provides significant comfort regarding the reliability of the financial statements for both the standalone company and the group as a whole.
Exactly. Unlike situations where auditors raise red flags, a clean report like this suggests good financial governance and transparent accounting practices at TCS.
So, considering everything, the performance, the strong order book, the focus on AI, and the clean audit report, what's the outlook for TCS?
Disclaimer, as always, remember that we are just discussing the reported numbers, and investors should consult certified financial advisors before making any investment decisions. The outlook for TCS appears cautiously optimistic. The record order book provides a strong foundation for future revenue. Their leadership position, investments in AI, and diverse service offerings should help them navigate the challenging macro environment. Key drivers will be the pickup in discretionary spending, especially in North America and BFSI, and their ability to convert the AI hype into tangible revenue streams.
And the risks?
Risks include continued macroeconomic headwinds impacting client spending, intense competition in the IT services space, currency fluctuations, and managing their massive workforce effectively, including attrition, which stood at 13.3% LTM last 12 months, which is industry leading, but still a factor.
Great analysis. So, wrapping up on TCS for financial year 25, they hit the $30 billion revenue mark, showed steady consolidated and even stronger standalone annual growth, maintained decent margins despite some Q4 profit pressure, boast a record order book pointing towards future potential, and importantly received clean, unmodified audit reports for both standalone and consolidated results. The focus now shifts to navigating the macro climate and capitalizing on the AI wave.
Well summarized. A solid performance overall, with the clean audit opinion being a key positive takeaway, providing confidence in the reported numbers.
Fantastic. Thanks for breaking that all down. And thanks to all our listeners for tuning in. If you found this helpful, do like, share, and subscribe wherever you get your podcasts. We'll catch you on the next episode.